morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, it was a holiday last Monday. Today we're back into the thick of things, and we're taking a look at what would have been quite an eventful first quarter of 2021 in terms of stock price and stock market performance, both at the domestic as well as international levels. Now, it would have been a pretty good run so far for the year. Will it continue? Will investors continue to benefit and enjoy an upward momentum in the stock markets at the local or domestic and regional level, international level, sorry? Let's take a look. Well, firstly, at the local/cross-listed level, we can see that there was some nice positive trajectory for the year thus far. The All TNT index was up in that red line just around 1%. The Trinidad and Tobago Composite Index, or TTCI, was up just around 1.5%. After a fairly sluggish start to the year, and that was driven in the main by some very positive performance by the cross-listed index, which fell around 18% last year. And in the first quarter completed March 31st, it was up just under 4%. Now that was driven by some pretty divergent performance across individual stocks. So despite some fairly modest gains at the index level, at the individual level, there were quite differing fortunes. And we can see that in terms of major movers, Grace Kennedy was one of the top performers for the quarter thus far, up around 28.3%, and driven by very commendable performance in its financial 2020 year when most other companies would have struggled, as well as acquisition activity. Guardian Holdings Limited would have also improved with commendable performance, notwithstanding the absence of its usual dividend, which investors may have grown accustomed to over the past years. But news of a relisting on the Jamaican Stock Exchange would have buoyed investor confidence in recent times, and Guardian would have for the quarter advanced just around 23%. TCL was also up around 20%. Industry developments, particularly on the regulatory side, would have increased TCL's competitive standing in the domestic market, and that would have certainly increased investor optimism around the stock. First, Citizens Bank and Agostini's Limited rounded out the top 5 performers at 8.6% and 8.4% respectively, and they would have had fairly good performance in the pandemic, but more importantly, very key announcements of acquisition initiatives would have driven investor confidence into the positive for both First and Agostini's Limited in the past quarter. And First was, as investors may be aware, will be expanding, was attempting to expand into Guyana by acquiring Scotia's Guyana operations. Agostini is in the midst of acquiring one of its major competitors in the Trinidad and Tobago space in terms of Oscar Francois Limited. On the other end of things, NGL was the worst performing stock for the quarter thus far, the first quarter of 2021, down 12.5%. Despite improvements in energy prices overall, the domestic production challenge is weighing on investor confidence, and that has been reflected in the stock price of NGL, the loan component on the energy sector of Trinidad and Tobago. Whitco, LJWB, and Scotiabank were also down, as well as GMMB Group Limited in the high single-digit area, around between 6.2 to 7%. For varying reasons, GMMB would have just completed some additional financing, but the Jamaica market seems to be one that investors are looking at with a little bit of caution at the moment. Now, in terms of the international markets, we can see that it has been pretty much a green light across most major sectors of the S&P 500. As at the end of March, the S&P 500 was up 5.8%. As of close Friday, last Friday, it was up almost 10%. And when we take a look at the sector performance, it seems to be no surprise that energy sector and the financial sector, the two worst performing sectors in 2020, have been actually the best performing sectors in the first quarter of 2021 as investors start betting on the recovery trade and the energy sector, for example, which you can get exposure to through the XLE ETF by buying international stocks or international ETFs, was up just around 29.4%. That financials index was up around 15.5%. The worst performing index was up just around 1.3%, and that would have been consumer staples and utilities up 2.1% also at the international level. When we speak more broadly at the international level in terms of major regions, stock markets mostly were in the green. When we take a look at the first quarter 2021 performance in that orange color or yellow color, we can see that the US was up, as mentioned, about 5.8% as at the end of March. Europe was up 3.5%, and Asia, excluding Japan, up 2.5%, carrying on their momentum from 2020 in that green column, which were all positive in those cases. Latin America, which was down 16% in that 2020 period, is continuing that trend down around 6.1% for the first quarter. So what can investors consider when positioning their portfolios in subsequent quarters for 2021? Well, at the domestic level, there is anticipated to be a slower recovery. The IMF would have recently cut its growth forecast for Trinidad and Tobago in 2021 in its updated April World Economic Outlook from 2.6 to 2.1%, despite increasing the average growth rate for the global economy from 5.5 to 6%. Vaccine rollouts will continue to be a positive driver for local economic activity. However, the pace of that vaccine rollout and the buy-in by the wider population is going to be a question that speaks to the speed of recovery as well, not to mention how the energy sector fares. So investors should continue to maintain selectivity by picking stocks at the domestic level at the very least that are exhibiting one or more of the following characteristics: that they have acquisition initiatives in the pipeline or have recently concluded them, would be introducing new business lines. And one stock that comes to mind would be Answer Merchant Bank Limited, with the launch of their Answer Bank commercial bank business line from after the acquisition of the Bank of Baroda license, as well as those stocks which are exhibiting quite significant operational efficiencies. And stocks that come to mind include, to name just one, Witco. For example, at the international level, fiscal and monetary support is going to be one of the prime drivers for investor confidence and continue to be that for the foreseeable future, as major governments and central banks continue to pledge their support to making sure that the economy gets back on even keel before maybe retracting some of that support. Vaccine rollouts continue and is outweighing the fact that cases continue to rise and lockdowns continue to be in rolling fashion across major economies. But for investors, for example, in the US, if you have taken about a 10% gain or enjoyed a 10% gain on your equity portfolio, it might be the time to think about taking some of those gains and reallocating into some safer investments for the time being, if you're happy with a 10% gain on part of your portfolio in just the first 3 months of the year. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com. Or, of course, you can check out our website, www.bourseinvestment.com, where this and all of our other research is absolutely free. So until next time, have yourself a great investing week. This has been the Bourse Report.